Hi everyone, this is 2026 Mentorship Program Lecture 28. Now, what I'll be discussing in this lecture is going to be the dollar index. Now, this is going to be a short lecture because if you have gone through the recent lecture, you know that I've been talking about the dollar index, calling out price on a day-to-day basis on dollar index. So in this lecture, I will be anticipating what I will be looking at in price going in this week. So I'm going to give you guys my overall idea, how I do look at price on a weekly basis. And this is going to be on a market review on the dollar index. Last week on the dollar index, so I'm on a weekly time frame on the dollar index. Last week on the dollar index, I talked about anticipating lower prices to run the sell side liquidity there. The dollar index is on an uptrend, but from the recent swing low to the recent swing high, there might be a retracement to a weekly fair value gap before a continuation. That I will be anticipating a counter trend retracing to the weekly fair value gap. And when price retraces to the weekly fair value gap, I will be paying attention to the weekly fair value gap to see if there's going to be a support in price to lead to a continuation in the weekly trend in trading high. So last week, after price took out the buy side liquidity, last week open, traded lower, took out the sell side liquidity, came close to the weekly fair value gap. Now, I will be looking at this as a complete retracement to the weekly fair value gap because based on the correlation between the dollar index and Euro USD already traded to the weekly fair value gap. So mostly going to be based on what the daily time frame will be doing. If the daily time frame is going to be supporting the weekly fair value gap, I will be anticipating higher prices, and my draw on liquidity is going to be the swing high, a continuation in the weekly trend in trading higher after the shifting structure running out this high. So your focus is going to be how price is going to be reacting to the weekly fair value gap and look at the daily time frame to give you the timing and price on when there's going to be an expansion in price trading higher to run the swing high. On the daily time frame, last week price action high took out the buy side liquidity, which was Friday's high, traded into the other block. I explained about this other block, so if you haven't gone through the recent lectures, make sure you go through the recent lecture. I explained the main reason I was looking at this as a resistance in price in trading lower to run the sell side liquidity. So looking at price, Tuesday traded lower. There was a gap between the opening price, the closing price of Tuesday to the opening price on Wednesday, which led to the run on the sell side liquidity. Thursday closed, created a swing low. Now the swing low is close to the sell side liquidity, looking at it as a counter trend to the daily fair value gap before a trade lower. Now, it's still a trade idea. Remember, we're looking at the daily to look at what is price going to be doing on a daily and most time on a weekly basis. Because if there's going to be an expansion on a weekly perspective, the daily we identify it more clearly. Just like last week, we run on a buy side liquidity. We're expecting a daily order block closing as a down close candle is a great timing to anticipate the next day to lead to lower prices in trading lower to run the sell side liquidity. So the same idea, you're going to apply the same idea. Look at what price we were doing on Monday, Tuesday, on Wednesday. That's going to give you the key perspective on where price is actually going for. If it's going to go into the weekly fair value gap to trade deep into the weekly fair value gap, or price respecting the swing low, leading to a counter trend, trading higher to the daily fair value gap. Now, this is mostly going to be depending on what price will be doing on Monday and on Tuesday. So that should give you a little perspective to what Wednesday will be doing. But for those that do know how to apply timing correctly from the daily time frame, how to look at the daily time frame to have a clear perspective, and to stick with the idea of what the daily time frame is actually talking about, you know that going on Monday, paying attention to the 4 hour and the 1 hour time frame. If there's any chances of price trading higher, then you should see a sign from both time frame. Now I can give you that idea as to what price we'll be doing on Monday, because now I will be live streaming on Monday, the same time New York section, which is going to be tomorrow, at the opening price of New York section. Now, depending on what price we're doing before the New York section, we're going to look what price did during the London section to what price actually doing during the New York section to see if we have a bias to where price is trading to. So going in with the idea, the overall idea is that a retracement to the weekly fair value gap is a great indication to in anticipating a continuation to run the buy side liquidity. So this should be our overall idea. As long as price is aligned with this perspective in price, then we will be anticipating a run on the buy side liquidity, which currently now price is not aligned with the perspective in trading higher. The fair value gap is still open. Now, there might be an SMT between Euro USD and the dollar index, so you pay attention to what the daily is doing. If the daily is going to be trading through the daily fair value gap, makes it an inversion fair value gap, I will be anticipating a continuation in that trend, and my drawn liquidity is going to be the swing high. But if price were to retrace, let's say Monday there was an impulsive price to the daily fair value gap, and price respected the daily fair value gap, traded lower, took out the swing low, traded into the weekly fair value gap. I will be paying attention to how price will be reacting to the price range. If there's going to be a fair value gap for whatever price action, like an auto block or a fair value gap within the swing high to the swing low, trading deep into the weekly fair value gap, I will be looking at the price action to see if it will be leading to a continuation in the trend, trading higher to run the buy side liquidity. So the daily is going to give you the timing to when price will be expanding to run the buy side liquidity. So your focus should be on the daily time frame. We already know what is the weekly trend and what are the weekly key points of interest we'll be looking at price we're expecting. Now we need the daily to give us the right timing to know how price will be trading around the weekly points of interest. So on Friday, took out Thursday's low. Now let's look at it from a daily perspective. So what price did on Friday? Price took out Thursday's low, did a retracement back into the price range. For it to go to the 4 hour time frame. Now the 4 hour time frame is still on a downtrend because a trade above this high, an internal shift retracement inversion fair value gap. Here's the inversion fair value gap. And you can see the prices is actually respecting it, trading lower. So this is a 4 hour fair value gap. You can see price respected it, traded lower. So I can say that the 4 hour is still in a downtrend, and we might see a continuation in the trend trading lower. Remember, the lower time frame is very important. Look at the lower time frame. What's the lower time frame telling you? Now, on the 4 hour, price is still on a downtrend, and now on the 1 hour, we can still see the price is still on a downtrend. Impulsive price trading higher, internal shift trading lower. Now, Friday opened, trade to the high, but price didn't take out this high. didn't run the buy side liquidity. Internal shift, took out Thursday's low. This is a swing high to a swing low, and the trend is still on a down trend. So if there's going to be a counter trend on Monday in price trading higher, it should be price creating a 1 hour trend, trading above the 4 hour fair value gap, leading to the daily fair value gap. So I'm trying to give you guys scenarios and price that if price were to trade based off the scenarios that I've been mentioning throughout this lecture, it shouldn't be a surprise to you guys. It should be something that I've already called out to you guys to show you guys how to engage in price. So you'll be looking to take a buy on a counter trend perspective if the 1 hour trend is going to be aligning, trading through the swing high to a swing low, creating an internal trend. Then after the internal trend, you confirm that it's an internal trend. Those are the times for you to look for your trade setup in trading higher. Now, going into 2026 for the remaining months, if you notice, I have narrowed down the focus to the dollar index. I narrowed down our focus to the dollar index because I've noticed something going throughout this lecture that personally, it have been a great development to my trade plan. It has been a great development to my results. That focusing on to narrow your focus to one currency helps a lot. It helps a lot in a sense that you will be so dialed in on that currency that it will be hard for you to miss a move, and it will be hard for you to not even understand what price is actually doing. Because at all time you have a clear perspective because you are focused, and it's going to give you that mastery when it comes to that specific currency. So I will urge you guys to narrow down your focus to one currency. Now, I use the dollar index as my overall trade idea, but I execute my trade on Euro USD. I don't trade any other currency from that. Now, I know I started with the dollar index, Euro USD, JP USD, and USD JPY. And I use the dollar index as a key directional bias. I use it as a key directional bias in deciding what to do on a weekly and on a daily basis. Now, because if I'm using one trade idea to execute on three other currency, it affects my PNL whenever I'm in a drawdown. If I were to go through, let's say on Hero USD, I were to go through three drawdown in a row, because I'm trading multiple currency, because I'm trading three currencies, it increased those losses to 9 or sometimes into 10 losses in a row, while on the dollar index is only three losses or two losses in a row. So reducing the currency, focusing on one currency really improved my trade plan. It really improved my P&L, and I would urge you guys to look into that. Look at what you're actually trading. Remember, you can derive a lot of trade from one currency. You can derive a lot of trade on one currency. You can be patient enough to make a bare minimum of 4% a month, which I've told you guys a lot of times that the first cushion in becoming a profitable trader is to make at least 4% out of the 12 months, like an 80% out of the 12 months a year, making a consistent of 4% every month for at least 80% of the months in every given year. That will give you a high edge, help you in having a good trade plan, and helping you in achieving profitability in the trading space. Now, there might be some months where you're going to be making more than 4%, but a 4% should be a great cushion to start with. That is to tell you that you don't need to risk to 1% on every individual trade to make a 4%. You need to learn how to minimize your risks while keeping an upside potential in achieving a great trade, a long-term trade. Try to catch daily trends, weekly trends. That have been my key, I can say, my key necessity when it comes to my bias. I need to have a great upside potential of at least 2 hour trade, 3 hour trade, 4 hour trade on a monthly basis. That helps me in achieving a 4% on a monthly basis. So I urge you guys to focus on one currency, pick one currency, learn more about the currency, understand how the currency moves, what is most likely to happen on the currency on a weekly basis, daily basis, that will give you the higher potential edge in achieving profitability. Now, going in for the rest of the month on the 2026 mentorship program is going to be so focused on the dollar index and euro USD. So you can trade the same currency that I'm trading so you can easily learn for what I'm actually anticipating in price to have your own idea and watch through price, learn how to execute based off the trade plan that is being taught on the 2026 mentorship program. So that is it for this lecture. I just wanted to tell you guys on my recent developments and how you can implement it to your own trade plan. So that is it for this lecture. See you guys in the next lecture.